Every once in a while in the markets, an asset just completely breaks the mold. It defies all the predictions. Well, in 2025, that asset was a metal we've known for thousands of years. But what it did, that was something else entirely. So let's get into the perfect storm that made it all happen.
Just look at that number, a positive 210% return. That's what the iShares Silver Trust, SLV, delivered in a single year. It didn't just outperform other commodities, it lapped them. It completely rewrote the rulebook for what we thought was possible that year.
So, that begs the obvious question, right? How? How on earth did silver, which is so often just seen as gold's cheaper, less exciting cousin, pull off one of the most unbelievable runs of the decade? Well, the answer isn't one single thing. It was a bunch of huge global forces all hitting at the exact same time. A true perfect storm.
And that's exactly what we're going to unpack here. This was a classic perfect storm scenario, a super rare situation where a handful of powerful, unrelated events all converged to push silver's price into the stratosphere.
Okay, so this storm had 5 main drivers. First, you had all this geopolitical chaos pushing countries to find assets outside the US dollar. Then, the price of gold got so high compared to silver that silver just looked ridiculously cheap. At the very same time, the world was running out of physical silver and industrial demand from new tech was exploding. And to top it all off, the US dollar was getting weaker, which just added fuel to the fire.
Now that supply crunch was a really big deal. The world was already short over 148 million ounces of silver. Then, China dropped a bombshell. They officially called silver a strategic material and slapped on export limits. Now, this wasn't just some minor trade policy. It was a global superpower basically saying, we're keeping ours, and that sent a shockwave through the market.
And that shockwave has a name, backwardation. It sounds complicated, but it's actually pretty simple. It just means people were willing to pay more to get a bar of silver in their hands today than to get a contract for silver in the future. It is the market literally screaming, we need the physical metal and we need it now.
And would you look at the result? This chart says it all, doesn't it? Silver's incredible 150% plus return just completely dwarfed what gold and copper did. It wasn't even close. This wasn't just a good year for silver, it was a year where silver was playing a totally different game.
So we've covered the why silver went ballistic, but what about the how? How do regular investors actually get exposure to this? For most people, the simplest answer is an ETF, the iShares Silver Trust, ticker symbol SLV.
SLV is super straightforward. Its whole job is to mirror the price of silver. It's not a mining stock or anything complex. It's literally a trust that owns and stores giant bars of physical silver in secure vaults. For a pretty low fee, we're talking 0.5% a year, it gives you a liquid way to invest in silver without having to, find a place to store a bunch of metal bars yourself.
But here's the thing. That incredible upside comes with some serious risks. The very same things that can send silver soaring can also make it incredibly volatile. It's a real double-edged sword, and you absolutely have to understand both sides of it.
So let's break it down. On one side, yeah, SLV is easy to trade, it's cheap, and it's backed by real physical silver. That's all great. But on the flip side, the risks are huge. The price volatility is just off the charts. The fund's price can sometimes disconnect from the actual metal's price. And remember, more than half of all silver is used in industry, so a bad recession could hammer demand.
And this quote from the analysis really puts a fine point on it. With volatility over 20%, silver's price swings are just in a different league compared to gold's. So what does that mean for you? It means you better have a strong stomach, because this is one heck of a wild ride.
Okay, so after an absolutely historic explosion in price, the million-dollar question, or maybe the $100 an ounce question, is what's next? Can this keep going, or is silver due for a massive fall? Let's look at what the bulls and bears are saying.
All right, the bulls believe the party is far from over. They'll tell you that the core drivers are still firing on all cylinders. Think about it. The AI boom and the green energy transition need a staggering amount of silver. The supply crunch isn't going away overnight, and central banks are still looking for alternatives to the dollar. For them, breaking $100 an ounce wasn't the peak. It was just the start of the next leg up.
But the bears have a pretty compelling case too. After a 200% plus run, you have to wonder if it's overvalued. A deep global recession could just crush industrial demand. What if China suddenly decides to open the taps again? And if the US dollar gets stronger, that's a huge headwind for silver. These are definitely serious risks to keep on your radar.
So we've walked through the perfect storm, we've looked at the main investment tool, and we've weighed the road ahead. Which really just brings us to the final, and honestly the most important question of all. Is an investment like this actually right for you?
Let's be really clear about who this is for. Silver might be a good fit if you're an aggressive investor, if you truly believe in these big long-term trends like de-dollarization and the green energy transition. But it is probably not a good fit for anyone who's conservative, who needs income from their investments, or, frankly, anyone who would lose sleep over a 20% drop in their portfolio. You have to be able to handle that kind of swing.
When you boil it all down, the perfect storm of 2025 created a massive tidal wave in the silver market that completely shattered records. The question for anyone looking at this space right now is pretty simple, but it's everything. Is that tide still rising, or is it about to roll back out?